Well, good morning, everybody. This is Mark Robertson, founder and managing partner at Manifest Investing, and I'd like to welcome you to one of our Saturday morning sessions. These tend to be quite a bit less formal, although we do have some formal numbers to go over here this morning. And I just want to say welcome to those of you who may be joining us for the first time, but I see a lot of familiar names, anywhere from Seattle to Omaha to East Coast, a lot of mid-Michigan people in the audience. But again, we will archive this recording. We'll make the PowerPoint available. I see a number of fellow groundhogs in the audience, and just want to tip my hat to you. As you'll see in a minute, it's been a pretty good year for the groundhogs. Even after we struggled a bit last year, we do seem to have a pretty resounding return to stronger performance, and that's a really cool thing. So I'm going to just kind of go over for a few minutes the results. These are preliminary, but the winners appear to be pretty clear. You see them there on the cover slide. The Broad Assets Investment Club from St. Louis is the overall winner and the group winner, and Andy Pagorek, a good friend of ours from Chicago, is the individual winner of this year's contest. And we'll talk about the contest a little bit and how much fun we have and that sort of thing. But again, welcome to all of you. Again, you can ask questions. If you have audio or verbal comments you'd like to make, please raise your hand and I'll try to watch for that also. So let's go ahead and get underway. We do have to do the disclaimer. We probably will. I know we'll talk about at least a couple of stocks, but no investment recommendation is intended. You guys all know the drill. You have to do your own homework. Everything we do here is about demonstration. In fact, we're kind of renowned for the way we demonstrate a philosophy and a process, an investing method that goes back to the 1940s that served a lot of us so very well over the years. So we could be talking about real companies in real time, and again, do your own homework. Added that extra disclaimer down at the bottom. Been crunching a lot of numbers since the close of the market yesterday afternoon, and you'll see there's 100 or so groundhog accounts that we have to crunch through and different things to look at. Could be mistakes made. I do bribe the accountants with pizza and adult beverages, but and somehow that could, I suppose, complicate things. Here's our groundhog creed. It's one that you guys probably know pretty well. We really do believe this. We think that all of us investing with a very long-term emphasis. In fact, the participants in the groundhog exhibit a long-term emphasis, even though it does go year to year. Many of you have already figured out that we actually pay more attention to the all-time results, really, and they're really pretty cool. They're starting to stack up and generate some pretty thought-provoking type messages. But we do lean on the lessons that you see here from people like David L. Babson and Benjamin Graham, George Nicholson, grandfather of the modern investment club movement. And we do think that following the methods, focusing on what we as a community believe to be the most important for long-term investing. And even though the groundhog stock picking contest is intended to be just for fun, I do think there's a lot of evidence that we do take it quite seriously, and a lot of you are thinking year to year. For example, even though we've got over 100 participants, the number of people who have attempted to pick a penny stock over 7 years is almost zero. There's been a couple real creative entries, but in general, people are really honing in on good long-term opportunities. It's kind of a cool thing to watch. Well, we kind of kick things off by taking a look at what we refer to as our heavy hogs. The heavy hogs are the consensus favorites from a year ago, and you can see approximately 20 of them here, led by Gentex over the trailing 12 months. But kind of watch this as the years goes by. We publish this as a public dashboard, and it always gives us kind of an indicator as to how we're doing collectively. And since many of us tend to hold the stocks that are featured in this contest in our portfolio, it's actually kind of a barometer or a bellwether as to how we're doing in general. But you can kind of see from top to bottom. You get a feel for the types of names involved. Again, very few penny stocks are going to ever even threaten. I wouldn't even say anything under $10 type stocks are going to make the consensus favorites for this type of list. But some of the companies there that have been really good to us over the years, Mesa Labs, one of our Forbes best small company discoveries, Microsoft, Cognizant, of course, even Teva. That one kind of stunned me. Teva actually beat the market last year, and there's a lot of people that scratch their heads over that one. Of course, long-term community favorite Aflac. And then there are some companies down there towards the bottom that have recently disappointed. Solar Winds was up 100% a year ago and then down 80% the next year, and that one's one of those type of companies that really can be quite the roller coaster. Vera Bradley appears to have stumbled a little bit on the execution side. I don't think it's anything terminal, but they have Landauer, company that does a lot of stuff with nuclear radiation and record keeping in out of Chicago and in the nuclear industry and that kind of stuff. Medical. They had a fairly major acquisition that they're still swallowing. But in general, pretty good performance. All of these, roughly $50,000 invested into all of these a year ago, were some fairly decent amounts there. So you can see, again, we use that kind of as a harbinger or a bellwether of what we expect to come. Here's the overall results. We're pleased to say that we did actually beat the market by a percentage point or two, and we outperformed our beloved rhinos. Talk more about them in a few minutes. Rhinos is our reference to some of our favorite institutional investors and analysts and talking heads, and they didn't fare quite so well. And you can see here that things are actually doing fairly well. Last year again was one of those years where you've heard us talk in the past about Jeremy Grantham, one of our favorite pundits in the stock market. He talks about flaky stocks, lower quality stocks that for some reason really did thrive quite a bit last year. Higher growth, stocks with a little bit less coverage, smaller companies, more rapid growth. A lot of those type of companies actually did outperform the bluer chips at the top of the S&P 500. And that's always going to challenge us collectively, but still we came in with nearly 50% outperformance accuracy. Again, accuracy simply being a look at how the stock performed versus how a mirror or matching investment would have done in the Wilshire 5000. Anytime that we outperform, it's basically a hit. So you can think of that as kind of a batting average. And again, giving it some context, the typical average investor, based on the research that we've done with the Motley Fool, has an outperformance accuracy of 30 to 40%. Let me go ahead and check and see if I can. Herb, I'm showing that you have a question. I'm going to go ahead and unmute you, Herb. I'm cool. Herb, did you have a question?
No, your voice was gone, and now you're back.
Oh, okay. How long was it gone for? Anybody else?
About a 30-second.
Interesting. I'm going to unmute Matt Spielman. Matt? Go ahead, Matt.
Yeah, it was fine for me, Mark.
Okay.
It was fine for me.
Good.
Thanks. Good morning. All right, let's go ahead and press on. Again, some historical perspective. Again, doing this for 7 years, it's been kind of fascinating to watch. We have, in general, outperformed the U.S. equity funds. Equity funds had a surprisingly good year over the last year or so, 12 or 13 months. Nearly half of the equity, these are actively managed funds, according to Morningstar, and nearly 50%. So they had their second best year in the last 7. And that can often be a period when we're a little more challenged, based on what I've seen going back over 20 years. But again, we'd really like to get back to the glory days of the Groundhog at some point. These numbers back in here were really cool. Although we did have our 4th best year ever at nearly 40% of the Groundhogs participating, outperforming the market, even though fairly challenging market at 20 to 21% year over year for the Groundhog. So good stuff. Okay, here's a look at the all-time results, and then we're going to dig into 2013. Again, we'll be taking our hat off here shortly to the Broad Assets Investment Club of St. Louis and Andy Pagorek in the number 2 position. They've actually both only been around the last couple of years, but they both kind of hit the cover off the ball during those 2 years, and they're certainly welcome. Like to see them maintain that as long as possible, but pretty cool stuff over the longer term. As a group, we can see that we're pretty close to approaching market performance. We're within a percentage point of market performance over that time frame. And some of these entries on the list, myself, for example, that's 7 years of data now. So coming in at double-digit relative return is actually pretty cool, even though I got my head handed to me in this year's contest, and we'll certainly be talking about that shortly. Paul Witt, our 2009 champion from Midland, Michigan, still checks in with an extremely high return. He's, of course, riding the tidal wave of his championship year. Herb, feel free to go ahead and win this thing. You're up at the top of the leaderboard. You've been doing this for a few years now and hanging in there real nice. Susan Michelik over there in Wisconsin, the Bower City ladies, are also up near the top. Ann Manning, one of our guest damsels out of Houston, is right up there. And again, a lot of very familiar names. Our 2011 champion, Nick Strategos out of Pittsburgh. Kudos. And then you'll just notice from top to bottom some names that you recognize from regular events and activities here at Manifest. So good stuff. Keep pressing on, everybody. Here's a look at the overall accuracy from top to bottom. I see Ty Hughes is in the audience today. We'd welcome another entry from Ty. He's got a very, very high accuracy number over the years, and perhaps even from Moose Pond, if you guys would care to put in a 2014 entry from the Moose Pond Investment Club out there on the East Coast. And again, you see a lot of fairly familiar names, and again, we tend to take this seriously with respect to how it all begins to add up. People who seem to be fairly successful. Again, Susan and her ladies over at Janesville, Wisconsin make the accuracy list also. So from top to bottom, some interesting numbers, and again, it just kind of puts a little underscore under, every month you guys hear us talk about on the roundtable how we're kind of thrilled to be in a 56 or 58% accuracy range. I think you start to get a feel for this, because keep in mind there's 100 names here, and that 56 or 57% performance ends up pretty high on this list if we were to insert the roundtable into this picture. So again, just make sure you keep it in context. The fact that our accuracy is as high as 50% is actually a very strong indicator overall. And of course, the champ from this year, Andy, ends up on the list, and so do the Broad Assets, who managed at 80% over their 2-year run in the Groundhog. So let's go ahead and talk about the specifics of the 2013 Groundhog VII results, and we'll give a standing ovation to the Broad Assets Investment Club of St. Louis, because this is a phenomenal situation here. $1 million invested a year ago was turned into $2,109,491 by, it's largely a group of ladies, but they're not chauvinists. The ladies actually welcome a couple of gentlemen into the club down there, so it's a mixed club. And one of the other things that we want to kind of point out, in fact, I've been kicking around a thought that's going to be a tiny bit uncomfortable to many of you, the notion of the question, are investment clubs dead? And this is one that you've heard kicked around a little bit. We see clubs disbanding, and a lot of press about an apparent disinterest in investment clubs. And I think the way I'm headed with this story is we see such vitality, and when Ken and I make visits around the country, and I don't think investment clubs are necessarily dead. Perhaps some of the aspects of investment clubs, but take a look here where the ones that have the parentheses and the city behind them, these are investment clubs. And I would almost argue that, from a few years ago when we saw very few investment clubs showing up on this leaderboard, it's almost a rebirth, at least in terms of performance. And it's really pretty cool. Keep in mind, $1 million invested a year ago, so if you're looking at something like Noah's Ark out of Chicago, we're talking about 34% returns on the stocks that they selected. And again, we think that people do take this seriously enough that it is a bit of an indicator as to how we're doing with our actual club and individual portfolios. So again, from top to bottom, we take our hat off to the investment clubs, hence that's where Snoopy and Woodstock are inserted on the page. And Just a really cool thing, along with some other household names that you guys know so well. My name is not on this list. More on that later. But Herb Lemcool, Kim Butcher's here this morning with us. You can see. Kim, you go ahead and win it all too. Feel free. Well, here's a look at our St. Louis champions. You can see the ladies have decided to let men join them. It's the ringleader there is seated right in the center, Ruby Lawrence. She's actually president of the volunteer chapter for Better Investing in St. Louis. Jenny Henderson also works as a volunteer for the St. Louis chapter, and they put on lots of good programs and just a delightful bunch of people to work with. And these guys should be proud. They're our first repeat champion of any kind, winning the Groundhog VI and Groundhog VII, and we have had the privilege of spending some time with them a couple of times over the last few years. It's really pretty cool. Ruby called and wondered if we might throw them out of the contest because they'd won it 2 years in a row, and I say, heavens no, keep bringing it. Keep bringing the ideas and just keep up the good work. Here's a look at their actual results. And again, are outstanding. They did select 5 stocks. The minimum was 5 stocks for the portfolio. You can see that the five stocks divided into 5 equal chunks, $200,000. So $200,000 in the case of Lynette has become $1 million. So that's obviously their big winner. It carried the portfolio. But also keep in mind that 4 out of 5 of the selections, including all 3 of these, actually outperformed the market also. And B&G Foods, that's not exactly a kick in the teeth either, going from 200 to 211,000. So this kind of graph over here is just mind-numbing. I realize this is just 1 year, but it's whether it's 1 year, whether it's real, whether it's a contest, whatever it is, it's really kind of fun to blow up charts and mess up the scale. This is just completely exploded off the chart. I think it's probably the best finish. It's right up there with Paul Witt back in 2008 or 2009, and what a strong performance. We'll take a look at Lynette here in a few minutes because they've actually kept that in the portfolio for the 2014 contest. You can see that a lot of health-related stuff here, and that obviously did pretty well coming into. They were all under pressure there a couple years ago. One of the healthcare information stocks that was featured during the January roundtable by Ken Kavula, computer programs, ticker symbol CPSI. Good stuff there. Any questions before we go on to Andy? Let me check and make sure that I'm not missing any. Everybody says that the voice has been behaving okay. I don't see any hands in the air or any extra questions, so we'll just press on. Andy has not been able to join us, and I'm not sure I'm seeing anybody from the St. Louis group either. I wouldn't be surprised to see one of them drop in. Well, here's Andy. Andy out of Chicago. He's been an active educator and volunteer for Better Investing in the Chicago area for a number of years. I've known Andy for a few years. I believe that's his nephew, but obviously he finds time for things other than investing and crunching numbers on spreadsheets, and we heartily endorse that sort of thing over the years. Here's a look at some of Andy's stuff. The portfolio returns for Andy were quite good also. You can see checking in at about 77%. Again, another exploded chart. Really kind of cool. And you can see that Andy did his thing with a little bit of friskiness also, going with Netflix. 3D Systems and Stratasys are both involved in 3D printing. By the way, he did an interview for the Chicago Tribune. I'll have to check the date, but I believe it was about 2.5 years ago, where he talked about the opportunities coming in 3D printing, and I believe he was probably one of the earlier people to do that. I'll check the date, and we'll certainly have more information on that. I've got the article set aside. But pretty neat. You can see that Andy was also the only groundhog in the field that went 5 for 5 this year. Every single one of his entries, again, starting with $200,000 split 5 ways, so $200,000 in each one. His weakest performer checked in at almost a 40% return, and his overall average, of course, is 77. So really cool stuff. And again, a bit of friskiness, quite a bit of growth here. And again, maybe a tiny element of flakiness in the vernacular of a Jeremy Grantham. You know, a lot of us are not going to probably not going to pour a lot of money into a company like Netflix, you know, with these type of numbers. But again, can work out. Non-core investing, you know, as long as you don't allow it to dominate your portfolio. Here's a look at some of the rhinos that we track. And these are done out of, and I mean this sincerely, out of admiration and respect and a little bit of fun, and just the hope that they will trigger some pretty good ideas from time to time. This year's winner from the rhinos is David Einhorn. Those of you who follow David know that he's a pretty successful hedge fund manager. He runs Greenlight Capital. And the company is actually a publicly traded company, at least one of his investing areas, ticker symbol GLRE. And he comes in at 32% for last year, relative return of double digits. And the interesting thing about David, a couple of things. This picture up here is actually from the World Series of Poker. He actually ended up at the final table last year, and that picture is actually from that. So that gives you some insight into the type of person he is. He is a high-stakes gambler, even with the investments that he pursues. And that's what's kind of fascinating, because a 32% return, if you actually go back 6 or 7 years, and we've been tracking him that long, his relative return is actually negative, even though he has a high accuracy. And the reason is you can see down here. Here's the actual Morningstar numbers for Greenlight Capital. 80% 1 year, 13, minus 12, minus 2, 46. He obviously hits home runs and strikes out. He's just that type of investor, so it's just something to keep in mind. And you know, contrast that with Warren Buffett and Berkshire Hathaway, shown here, where his returns are not nearly as spectacular. They're just simply more steady. And but you're not going to see 80% 1 year and minus 40% another year. They're more down the middle, more of a singles and doubles hitter when it comes to Mr. Buffett. The interesting thing about Buffett is, in fact, there's been a little bit of press written about this here lately. Tracked over the last 7 years, he has outperformed 4 out of the last 7 years, but the relative return now over the last 7 years is actually negative. And that doesn't happen very often in the history of Berkshire Hathaway. So it's just kind of interesting to note. Some of the other people really like the writings of Whitney Tilson, but it's getting a little tougher to follow him. He discontinued the mutual fund that we used to use for this. Jim Cramer, always fun to follow. The picks that you see us track in the tracking portfolio are from that Actions Alert Plus stock service, and they didn't have the best year, and have had a couple lackluster years here lately. A couple of the other entries, the Morningstar Ultimate Stock Pickers, we've only had them in 1 year, but they delivered. They'll certainly be back if I can figure out how to find that stuff for this year. And last but not least, Eddie Elfenbein. He runs a blog at crossingwallstreet.com. Many of you are very familiar with it. We've talked about Eddie quite a bit. I think in the world of investing, he is probably one of the people that is most like us. This is Eddie right here in the middle. And what is neat about Eddie is his best or his buy list that's published at crossingwallstreet.com has outperformed the S&P 500 now for 7 consecutive years. You can see that he would have placed pretty strongly in the Groundhog contest for 2013, and even more importantly than that, over the long term, just really steady, dare I say steady Eddie, very steady performance over the long term. That is a 7-year track record. Keep in mind that this Morningstar number is a single year, so again, potential flash in the pan. But again, Eddie, we'll take a look at what Eddie's picks for this year here in a few minutes. And then the other person on this list, this one kind of breaks my heart a little bit. I really like Abby. Abby is, you know, one of the ladies in a world dominated by way too many men. One of the reasons I think many of those investment clubs are bubbling to the top is the influence of some pretty sharp women. And I'm not saying that to patronize or anything else. It's just simply the way it goes. Abby, who works for Goldman Sachs, generally does pretty well in these type of things. I'll be crunching a few more numbers for her, especially on her historical side, but she was the only one out of over 120 entries to actually lose money with the selections made a year ago. So that's really almost kind of chilling because she is pretty cool. Really like this graph. It just drives something home that I think many of us know. I mean, if investment clubs are dead, then I'm missing something, because at least in terms of performance, because we're now looking at 7 years of performance, looking at this, in this case we're talking about all-time returns. It's been a fairly tough market to stay ahead of over the last 5 years, as witnessed from, you know, all the way down here up to where it's ended up here in the last couple of years. But nearly 50% of the groundhogs have positive relative returns. Now contrast that with U.S. equity funds, again over 8,000 funds based on data from Morningstar, and that's actually a fairly high number compared to historical norms, 30 to 35% of them beating the Wilshire 5000 benchmark over the last 5 years. And then of course the rhinos, again, a lot of home run hitters and strikeout artists when you start dealing in that field, so we have to really do our best to discern and be selective about, you know, what contribution they make in the field of generating ideas for us. Let me double check for questions here. Andy's here. Good morning, Andy. Andy Pagorek. Let me check and see if we have anything else. Yeah, he snuck into the room at the top of the attendee list. So, again, good morning. I'm going to go ahead and unmute you, Andy, if you have a microphone. Do you have a microphone this morning, Andy?
Yes, I do.
Well, good morning and congratulations, sir. I don't know when you came in. Did you? How much have you seen?
About 5 minutes late.
Oh, only 5 minutes late. So again,
The 30-second pause.
Okay. Well, we were pausing for you to find your seat. Apparently. How's the weather over there in Chicago today?
Brutal.
Brutal. I hear it's coming our way.
8 inches already.
Whoa. Well, it's a good day to sit around and crunch some numbers and find some good stocks, huh?
All right, thank you. This is nice being here.
Well, again, I want to just go back and echo what I said a few minutes ago. I think I raised and given an internet cyber standing ovation, solid performance last year, and good luck in the year ahead. We'll be watching to see what ideas you generate for us here in this year's Groundhog.
I think I'm going to be down at the bottom next year.
I doubt it. I see a trend. But anything can happen. Anything can happen.
I loaded up the investment club instead of me.
There you go.
All right.
All right, we'll go ahead and press on. Here's a look at Andy, I think I'll leave you unmuted in case you have any comments to make. So I'll leave you unmuted for now. Here's a look at the results, taking a look at some of the characteristics. Keep in mind these are our current dashboards, so this don't necessarily reflect what these companies look like at the time of selection. It really is just a performance display. I've highlighted the investment clubs in yellow, so again, I really think I don't think I'm imagining things when I think about the resurgence of, you know, some of the performance returns by investment clubs. There's more participating here now, that's true, than in the past, but at the same time, you know, Susan Michelik and her Bower City ladies and a couple of the others were fairly lonely for a while. That changed with Herb Lemkool and his Traverse City bunches. They've been near the top of the leaderboard for the last few years. And again, if you know somebody out there with an investment club, encourage them to sit down, make 5 thoughtful, considered choices, and send them our way. And we really do believe in the wisdom of community and the wisdom of leaning on fellow partners and selecting stocks in in that fashion. So you can see from top to bottom. Again, you can dive into any one of these dashboards by going to this link that's displayed up here at the top, manifestinvesting.com Groundhog Scoreboard /2013. That's also the link that's used in the forum posts and that sort of stuff. So you can actually dive into the actual portfolios if you want to go down a little bit deeper. And we'll probably spend some time with my selections here in a few minutes. Did want to take a quick look at that company that went from 200,000 to 1.2 million in a matter of a year, that the ladies down south, St. Louis, actually ladies and gentlemen from Broad Assets, interesting company. And I do think it's something that, you know, this is not up straight and parallel, but I do think it's the kind of situation that you can probably watch for as an investor. Hugh McManus does some of this very successfully. It's the situation of when a company breaks through and starts generating, you know, much higher earnings, hopefully earnings that'll stick around and continue on the growth pattern. Again, this is one of the definitions of emerging. You know, emerging from the land of negative earnings, going north of zero, and then staying there. And if you can find a company that fits this type of picture, looks like a well-managed, sustainable company, there can be a real outsized opportunity. And I think that's what the ladies have pretty much discovered here. I don't know that much about the company. And if there's anybody in the audience that knows this company front and back, you're certainly welcome to comment. But again, this is a situation where it's a relatively small company, 200 million in annual sales, and with some apparent opportunity in front of them and some apparent profitability. So if you, as you're shopping for companies and you find one of these, by the way, we would love for you to share it if you find one of these for the rest of the community to chew on. But really kind of a neat opportunity to find, and can be an exciting situation to ride. I know many of us in this area discovered Neogen at a fairly similar stage, I would say 10 to 12 years ago, and that's been extremely rewarding. So again, be on the watch for those, and certainly be quick to bring them to the attention of your community friends and colleagues. You know, one of the areas that we think is rife with these type of opportunities is the Forbes Best Small Company list that we feature every October, and would recommend that. That's probably not a bad place to shop for opportunity. And if you're still on, this was a little bit busy, but I did want to make the audience aware that you're the guy behind the Longfellow Investor Report, that you crunch through all kinds of numbers. And if you wouldn't mind, if you know, I had asked, you know, how do you go about picking stocks for something like this one-year contest? And perhaps you can just kind of walk us through some of the stuff that you think about.
Well, this is a report I put together this year. Obviously, it's, is my cursor active?
No, it's still my screen, Andy, so if you just talk, I can point perhaps for you.
What I did was I did my research at Standard & Poor's to see if it was a buy or hold. In the growth, GRW, that's anticipated growth, earnings growth of the company. So all the way down in the middle, there's F&P, anticipated growth of 4,300. Sort of shocked me there. Then I'm using Thomson Reuters, and you'll see that they're all buys or strong buys in that condition.
Okay.
And the column next to that is Market Edge, which is actually technical analysis on how the stock is performing at the particular time. So MD is mildly deteriorating. You have a buy, you have some strong buys inside of there. L stands for long rather than being short on the stock. And then the things that I look at are on the right-hand side, that year-to-date price growth. That's the actual year-to-date price growth from 2013 up until January 14th. So this is kind of momentum investing. Obviously, Groundhog Day is a run for the roses, but I look for quality companies, and I look for companies that are growing. And the column next to ACE is LTM. That means the last 3 months, how much the price has grown in the last 3 months. So I'm also looking at not only have they performed well throughout the year, but what have they done the last 3 months. And over 2 more columns over there where it says 213 high low price. This is a little bit reverse of what Hugh McManus does. He's looking for bottom fishing where a quality company is underperforming. This happens to show that these are stocks that the current price has exceeded the high price from the previous year. Let's say the first one by 63%, 88%, 66%. So I take into effect a lot of different things over there, and I also take into effect their quality also. But you'll find some of mine are not up to the quality status that you have.
Okay.
I tend to, yes?
No, go ahead.
I tend to not want to duplicate what other people do. I want to find something outside of the box. And that's how I do my searching for this.
Yeah, we had talked a couple of times over the year last year where you said that you feared that some of the Groundhog participants were kind of fishing in the same barrel too much. I know I'm paraphrasing, but what it sounds to me like you attempt to do is you do try to keep a focus on quality, but at the same time you try to isolate momentum and certainly herd sentiment and capture some of that in favor. And again, for a one-year situation, that can be a fairly powerful thing. So, Andy, this address down here, is this active?
That's the actual web page. I normally tell people to Google Longfellow reports.
Okay.
By the way, Longfellow stands for long-term fellow investors.
Cool.
So
maybe I'll ask you to put one of these together for a stock search or a stock screening in our newsletter and let people know about the availability of this resource. Give you some stuff to kick around. Well, thanks for letting us know.
All right, thank you.
So with that, I thought what we might do is I wanted to make sure everybody's aware of where they could find Let me go ahead and kick into Manifest Investing here. Let me check and see if there are any questions for Andy. Not seeing any hands in the air, so we'll assume you're relatively happy about that stuff. Susan Michelik says that the Bauer City Groundhog entries are stocks that they actually own in their portfolio. Not once as an attempt to win the contest. I completely agree, and it's something that we see from a number of people and a number of participants. I suppose you've been here the whole time also, Susan, while I've been talking about you. All right, if you haven't turned in your stuff for this year, well, it looks like the post went away from. Let me go ahead and dig into the 2013 results. We keep the stuff for the contest in its own folder in the forum, so let me go in through that path. Just going into the Manifest forum, you can see I'm signed in as one of the Groundhogs. So going into the Groundhog Challenge, up near the top, you'll actually see where we keep the scoreboard for 2014. And here is the 2013 scoreboard, so let's go ahead and dig into that. And then all weekend long and into the early part of next week, we will be stacking the 2014 scoreboard, so you might want to take a look at that. But here's the current day results. Now keep in mind, I take a snapshot of this, but it will change here on well, Monday will begin to change. So the snapshot will be in the newsletter, but you can see from top to bottom. A couple things I do want to look at. I want to spend just a moment on True Confessions, because I'm down at the bottom of the list, and we'll go into my portfolio, and you'll see the selections that I made a year ago. And so I selected, I believe, 10 investments, so 100,000 into each one. So thank goodness for the remote people, the TV remote people. This is a Ken Kabula idea that I actually do own some shares of this one, so I'm quite happy about that. And Universal Electronics and Mesa Labs actually served me pretty well. I like Qualcomm. Qualcomm is probably on my short list for this year. And Coach has been faced with some challenges here in the last few days, so they've actually come down. They were performing much better than that. One of my favorites from last year that really didn't work out was Body Central, ticker symbol BODY. I really expected more from them. In fact, after I picked it, it shot up 50 or 60%. But at some point, all the momentum was drained out of this stock, and they took a major reversal. And you can see that they're still pretty badly dinged. And I don't know what I think about that one now, at least for a shorter-term contest. The other thing that I did, and I have to confess that I was kind of playing around a little bit, getting playful, if you will. These are actually votes against the market. In other words, they're kind of a hedging technique that if the market had taken a dive, I would have done really well compared to the average person in this contest. But it didn't work out. These are both exchange-traded funds, and then I stuck 10% of mine in basically a cash equivalent, which came in at pretty close to zero return for the year. So I'm actually quite thrilled to end up at 11.4% for last year, underperforming the market by 10, but I did this for a couple of reasons. One, to be playful. I mean, I am near the top of the leaderboard, and if the market had taken a hit last year, as I thought it was vulnerable to, I would have come out way ahead. So that didn't work out. I failed. But the other thing that I wanted to kind of point out, and let's go ahead and take a look at the market as we look at it. Here, I'll just pull up the S&P 500 longer-term chart. One of the things that you've heard me talk about a lot over the last year, and this is something I really wanted to reinforce. This is the S&P 500. We could look at any major benchmark. One of the things that we began seeing about a year ago was this overbought condition, the relative strength, basically saying, you heard Andy talking about momentum a few minutes ago, just some concerns that the momentum had perhaps been overdone. Overbought stuff was way overvalued. But one of the things that we've learned from watching this indicator is you can't watch it in a vacuum. You can't take any technical indicator by itself when you're looking for general overall trends. And you've seen us write about that a few times, because a stock, a stock like Apple or any stock or any industry or any benchmark, they can remain overbought for a very long time. In this case, going back here to the 2006 to 2008 time frame, it was basically overbought for a few years. And we were very early into that back a year ago. So it was really quite a hedge that wasn't necessary and didn't work out very well for those of us that did that sort of thing. I think Dan Hess, it could be argued, kind of had the same type of strategy that didn't quite work out quite so well. The other thing that we've added in the last year is, don't just look at the momentum, this overbought or oversold indicator known as relative strength index, but basically look at these kind of as part of a bigger puzzle. And this is the rate of change. ROC stands for rate of change. In this case, I'm looking at 9 months. Typically, would look at 12. Rate of change over 12 months, it's nothing more than taking a look at the price today versus the price a year ago. So in the case of the S&P 500, the price has changed 21% in the last year. So even when a company or an index or whatever investments you're looking at is overbought for an extended period, what this is basically saying is it still has a lot of very favorable momentum and sentiment, and really only need to become concerned when we see this type of pattern forming and basically the momentum dropping out of the stock. So again, what we're trying to avoid is this situation, the Great Recession of 2008, 2009. But again, notice that it really only corresponds to when the price momentum comes out. Again, probably one of the reasons that Andy tracks some of those, I almost think of them as fine-tuning characteristics. I spend 80 or 90% of my time on the fundamentals, and then kind of fine-tune with some of this kind of stuff on the side. And what this is basically telling me today is there's not a lot of cause for concern, even though the market is overbought. There still is quite a bit of positive momentum, and it's something that we will watch fairly carefully to make sure it doesn't drop out. But Julie Werner shared that Jim Stack, I'll probably make a post about this, Jim Stack, market strategist that we do respect quite a bit here at Manifest Investing, he talked about he wasn't too concerned about a year ago, but he's probably as concerned this year as I was a year ago. And he basically makes the case that he doesn't think that the underlying fundamentals of the marketplace, even though a lot of stuff is strengthening, productivity, GDP, all that stuff is spinning, and at least slowly spinning in the right direction. If this thing continues much longer, it will be one of the longest bull markets in history, and he just doesn't see a real strong fundamental foundation for that. So he argues that we have to be at least in the last phase of this bear market, expecting a bull market, expecting a significant correction or a recession, and who knows when. But we're certainly more vulnerable to that today than we were even a year ago, and just something to kind of think about. So that's what the strategy was and why it failed. Again, kind of an experiment, kind of playfulness. I'm not sure what I'll do this year. Maybe I'll ask Dan Hess what he's doing and follow suit with Dan. But that sort of thing. Let's go ahead and take a look, since many of you probably want to talk more about not so much what's happened, but what other groundhogs are seeing. This link will be published here in a few minutes, but if you simply switch out 13 for a 14 up there, why is it not letting me do that? That's clearly my computer messing up. The scoreboard for 2014 will be out here in a few minutes, and you can see that the club from St. Louis has already checked in with their stuff, so we'll take a look at that in a minute. I want to come down here, and I talked about Eddie being one of the talking heads or gurus that's most like us. Let's go ahead and take a look at Eddie's selections. These are straight off of his buy list from crossingwallstreet.com, and I think you'll start to see, how much similarity there is. When you take a look at Eddie's portfolio, again, with the average stock in the 5 to 6% return forecast range, Eddie's up at 8 to 9, so he's got a few percentage points there. Very high quality. And again, he's more of a Hugh McManus type investor in terms of less growth, stronger blue chip, watching for opportunities, but really focusing in on some of these higher quality companies with a few kind of opportunity situations. Your Fords, for example, a couple others that kind of sprinkle in here, but his portfolio is predominantly core holdings, and an interesting place to shop. Again, he's got quite a track record and steady over the years. I'd probably sort it by return forecast and start shopping up at the top. I'm pretty sure that amongst my selections, and I'll be posting them shortly, Cognizant and Qualcomm are both near the top of the list. So they're both strong candidates to make my list also. You see anything there you like, Andy?
Oh, I think you just changed it a little bit. You were at well, they're talking about Medtronic moving, and then yeah, there we are. Medtronic, Stryker, I'm sorry, not Fiserv. Yeah, Fiserv did very well this year also.
Yeah, and that's why the return forecast is so low on this one. One what Andy's referring to is many of the people who follow some of these medical device companies have actually started ratcheting up some of their expectations, and they think some of the healthcare concerns that we've had might actually be easing up a little bit on some of those type of companies. And so they may have been a little bit overpunished, like that's never happened before, by the rhinos. So that's Eddie's list for this year. Let's go ahead and take a look at, well, here's the broad assets. Let's go ahead and take a look at them, see what they've got up their sleeve for this year. You can see that they kept Lynette in the portfolio. Still think it has room to run. That's that emerging opportunity, but they like fresh market. By the way, when we put out the heavy hogs for 2014, Fleet Core is virtually certain to be there. I know Herb Lemkool picked Fleet Core for one or more of the portfolios that he's involved with. A couple of people have picked healthcare services also, so that could show up. I know I believe that was on Matt Spielman's or Paul Witt's list. Just a number of companies there, so some companies worthy of study. What else can we take a look at here? Well, Dan Hess is in with his opportunities for this year. And it looks to me like Dan, and this is a theme that he very, very commonly or frequently urges us to pay attention to, he's looking at some emerging market stuff here, thinking that the emerging market might be a place of strength in 2014. So he's got a couple of ETFs. I believe one of those is, well, one's Wisdom Tree for sure. I'm not sure what the other one is. I think that's a more broad ETF, along with some healthcare stuff and a whole bunch of energy stuff. Interesting. So I think you can see, some of the things that you can take a look at in the portfolios as they, again, file in. I always like to see what some of the people that have ended up on the leaderboard or near the top of the leaderboard, what's Herb up to. Herb's going with some pretty conventional selections, a lot of community favorites. I could envision having more than one of those in my list. I'm going to probably try to stick to a short list, closer to 5 than double digits this year. Any questions or comments from the audience?
Mark, can I make a comment about SodaStream?
Yeah, go ahead.
There was an article in the paper yesterday or the day before about protesting SodaStream.
Mm-hmm.
It's out of Israel. Actually, it's in the Palestine area. And there is a activist group that, excuse me, an activist group that is protesting against SodaStream, and it's a fantastic example of cooperation between the Israelis and the Palestinians, but they're just trying to destroy jobs for these people. So that may be something to consider.
You're saying that the activists are interfering?
Activists are boycotting it very bad.
Okay. That ticker symbol.
Although it's been very popular.
Yeah, the ticker symbol is SODA, S-O-D-A. I believe it's covered by Value Line in the, it is, in the standard edition, so it's one that could be taken a look at. I heard this referred to last night on the news, probably talking about some of the stuff you're talking about, Andy.
Okay.
It's a worthy study, and if Andy's right, there could be some price compression here. You can see that the price is down pretty close to the IPO level at this point, and it's probably a worthy study. I mean, take a look at the earnings track record here for the last couple of years. 225 and 310 expected for 2014. They basically make the make your own soft drink at home stuff. I do believe that these guys could come under attack by the short sellers if they smell any blood in the water too. So probably something you want to keep in mind. Anybody else have any comments or questions? I see Matt's got his hand up. Matt, I'm going to unmute you. Matt Spielman. Go ahead, Matt.
Yeah, hey Mark. Since we're talking SodaStream, I thought it was interesting. There's also a very good article on Seeking Alpha about this. So if you think that the story is really about the U.S. market, and if it seems kind of a flash in the pan, they really have some very strong markets in Europe, around the world. As Herb said, they're based out of Israel, but they have some very strong global markets, and it's a much more mature company than this history would appear to show.
Yeah, any idea when they started? Let me go ahead and page down here.
No, I don't actually. I don't know when they started, but they have some of the Scandinavian companies actually have 25% of households have the device.
Yep, the information is not there, but maybe something we can dig into collectively. And I'm not sure where it shows up on Manifest, but let's go ahead and take a look and see what the fundamentals look like with that price down so much. Again, it's got a limited track record, but as Matt has pointed out, it's not certainly not an infant company. Notice that the quality is relatively high, and as both Matt and Andy have indicated, maybe some opportunity. I did notice that it's appeared in a couple of Groundhog portfolios so far, so could be interesting. I see, thought I saw Herb had his hand up. Hold on. Herb, I'm going to go ahead and unmute you.
Yeah, I just wanted to comment about soda, that I'm surprised that the environmentalists in the United States don't grab onto this, because this is a great way to preserve the idea of not using any plastic, because you're not bottling and buying the bottle and bringing it home. You're actually making it yourself. The challenge here is that whether or not the people will actually, once they buy the machine in the United States, as to whether or not they will continue to buy the product. And that's where this company makes their money, is on selling the product after the machine. The machine is only one small part of it.
Yeah, and I would expect very similar, at least from a concept standpoint, the same type of pressures that a Green Mountain Coffee Roasters has faced.
Mm-hmm.
So it's very vulnerable to what I would call almost an attack of concept.
Yeah. If it hadn't dropped so far down, I wouldn't have put it in my portfolio. Because it had dropped, that's why I did.
Okay. Sounds like a reasonable objective. I'm going to go ahead and switch to Nick Strategos. Nick? Good morning.
Hey, how you doing? Yeah, good morning.
Well, first order of business, hold on. We need for you to go over and either jackhammer or whatever is necessary to get Punksy Phil. Make him available for his shadow. This is desperate. You shouldn't be working on anything else right now, Nick.
Well, unfortunately, if you listen to the weathercasters around here, it's probably a pretty high chance it's going to be pretty cloudy tomorrow. So, I mean, we're looking at a storm coming in. So, I don't know that he's going to see a shadow, but I'll do what I can to make sure that it does.
Get over there with a stop, a light. We'll get you a big beam, whatever it takes. What's on your mind, Nick?
Hey, well, I was going to share, too, that I've seen this week there's a lot of controversy, too, over SodaStream. They're actually buying a Super Bowl commercial tomorrow. And Scarlett Johansson is in it, and a lot of the things that I think it was Herb just said was one of the things that they're focusing on is that there's no plastic, you're using water. But I agree with them. I mean, from what I've seen of the company and learned, it's really the repeat on the product that they sell to make the flavoring. So, but it's also pretty controversial because, I mean, Scarlett Johansson, attractive young woman, and it's pretty suggestive at the end with her drinking her soda that she made and that kind of thing. So there's been a lot of controversy. So it's becoming a lot more aware to people in their mindset too that there's this company out there that they maybe didn't hear before.
Yeah, and that rings a bell. Now, what they were talking about was Pepsi is the most prominent advertiser at the Super Bowl,
right.
And I don't think they're real happy about SodaStream being involved.
No, well, also because they do say something at the end where they kind of slam both Pepsi and Coke.
Oh.
And so it may actually not run, but I'm sure you can find it because I saw it this week. I think it was on Fox News. They actually ran the commercial, and the last line really is like smacks Pepsi and Coke.
Oh, okay. Well, that
may or may not actually show up.
So maybe we get these guys to put the helmets on and square off, and they could be more entertaining than the game itself.
Yeah, instead of Puppy Bowl, we could have Pepsi Bowl or something.
There you go.
Soda Bowl.
All right.
Hey, well, one more thing, too, before you unmute me. I just want to say congratulations to Andy as a past champion. It's a nice honor to have. So congratulations, Andy.
Thank you very much.
Good stuff. Go Red Wings.
Go away. Well, let's see if they'll catch my Penguins, buddy.
Okay.
Penguins are certainly flying high this year.
Hey,
All
listen,
right.
Chicago's in the West now.
I know it. That's so unusual
yeah,
this
yeah.
year. All right, let me double check questions here, see if anybody else has any. Well, now we're getting Seahawk comments. To be expected. Yeah, just some more reinforcement from people that they like the flexibility it gives them on the beverages that you can make at home, maybe with a little less sweeteners. Okay, I'm not seeing any. I see other people have suffered with Body Central. Any other comments or questions? Again, if you've participated in the Groundhog in the past, you're certainly welcome. We would love to have you back. I see Norm Chemnitzer is here. And Norm turned in his best year ever. Badger Chemnitzer had a really good year, ended up near the top of the leaderboard here last year. Anybody else have any comments or questions or anything else you'd like to take a quicker look at? Otherwise, I'm going to have to begin searching for that snow shovel, which is probably under a snowbank or a snow blower or something, to handle our situation here. I think I need to move south, at least temporarily. So with that, I think I'll go ahead and shut down. I'll stick around for a few minutes if anybody has any other questions. But again, congratulations and good luck to those of you that get your stuff in for Groundhog VII, the 2014 challenge. Look forward to playing along this year. But again, congratulations to the investment club from St. Louis, Broad Assets, and Andy Pagorek of Chicago. Look forward to hearing more from both of them. Watch for the cover story in the newsletter, which will be out in the next couple of days. All right, I see Herb has his hand up. I'm going to go ahead and unmute you, Herb.
Yeah, I was just going to ask that when you, what is the actual date that you will start the contest, and will you readjust those prices when we do that date?
Oh, no, it starts now. I mean, basically, everybody will be entered in by 9:30 Monday morning.
Okay, so
because it's really, you know, right now it's really easy. If you use the batch entry process at Manifest, where you enter the price and then enter the tickers, it's real easy to do that right now.
I guess I don't know how to do that. So.
Well, let me demonstrate. If I were putting together a portfolio right now, this is the reason it's important to get them in to me this weekend, because I don't want to punch the calculator. I've got a lot of other stuff I need to be doing for you guys. So if you add a dashboard, and this is how a lot of times if let's say you're watching a show, or you're dealing with the Forbes list. Let's say you're watching Kramer. Not sure why, but you can put $100 in each of, let's say he mentioned McDonald's and SodaStream and GE with Abby, Microsoft, just a couple others, CPSI. So basically anybody who makes the entry this weekend, I just have to basically divide up the amount, enter their ticker symbols. A lot of times I'm able to cut and paste, just hit submit, and you basically have it. And, you know, all the stuff is automatic.
I didn't do it that way. I actually entered the individual symbols and then did the calculation myself and then put in the amount and got it that way. So would you be interested in having, when we do that, because we post, you know, I said to go ahead and post those for the public. Does that make a difference too on how you get that?
All I need is the list of tickers. I mean, literally either space separated or comma separated. Kurt's made it so that all I do is cut and paste the list of tickers. Keep in mind that the program is going to actually, well, here, just as an example, if I wanted to add, and again, you can do this for other things, but let's say I wanted to add $500 worth of Goldman Sachs and Aflac to that portfolio, the program does the math. You'll see that Goldman Sachs and Aflac will be added, and it basically calculates the shares. So you can see how quick I can do these. I'll have, I have over probably over 70 entries already. I'll be able to do those in a little over an hour.
Cool.
Great.
All right.
So the master dashboard will be up and for you guys to play with later today. Or you can get there just by switching that date to 2014. But let's have some fun, and again, encourage friends and other clubs to get involved.
Cool.
I see Carol Fines in the audience. Be pretty cool to see one of the Puget Sound Model Club. They've been on the leaderboard the last couple of years. Be good to have an entry from them this year. You can pick stocks that are compatible with the Seahawks.
That's cool.
All right, so I'm going to go ahead and shut down the official. I'll stick around for a few minutes. And again, congratulations to those clubs, and everybody have a wonderful, happy Groundhog Day. Take care, everybody.
Thank you. You too, Mark, and I appreciate you doing this. This is a lot of fun.
Thanks, guys.
And educational.
I think so.